You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time for TWIFO, This Week in Futures Options, the program here on the Options Insider Radio Network, where we break down the week that was from a futures options trading and trends and analysis and unusual activity and crazy trades and all that other fun stuff perspective. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. Quite a few programs for you guys to choose from, including many archived episodes of this here program, TWIFO. You want to go back and see what we talked about maybe on WTI and crude going on a month ago, or maybe something with the silver spike recently and the changes, the ever-evolving nature of the gold volatility skew, whatever it is that catches your trading eye. Check out the archives at TWIFO to find out more. Of course, you can get that theoptionsinsider.com or via iTunes or TuneIn or Stitcher or whatever it is that floats your boat out there these days from an audio perspective. Of course, you can always grab us as well via the old the iTunes and the Google Play App Store, where you can get our mobile app available for iOS, Android, and of course the beloved Fire OS. And joining me on the old program today, oh, by the way, I always forget to mention we are indeed streaming live via the old Mixlr. So if you guys are so inclined, you can join us there. And join us every Friday, 3 p.m. Central, 4 p.m. Eastern. You can ask us questions about futures options, listen to our analysis, and all that fun stuff. And if you want to follow along, not just live streaming, but actually with the data, live as Nick and I are looking at it ourselves, the best place to do that, the only place really to do that for free, is to go on over to cmegroup.com/TWIO. This Week in Options, and you guys can play along. In fact, I have it open right now, listeners, as we're talking. You guys can play along with us, see all the data as we're looking at it and run your own reports on whatever products float your boat, all completely for free. And joining me, a rare treat on the program today, we got my cohort here, Mr. Nick Howard, live and in studio instead of beaming in from an undisclosed location. Nick, welcome back to the Options Insider Studios. It has been too long.
It is good to sit in this nice, comfy chair while we do the show.
We do try to make things comfortable. Don't fall asleep here while we're doing the show, though. We got a little bit of a show to do. Then you can nod off and have a nap, sir. All right. And with everything assembled and ready to go, let's dive right on into our first product of the week. It's been an interesting week, Nick, from an overall volume perspective. You know, August, typically not, shall we say, the lion among months in terms of volume. People are on vacation. A lot of the institutional players are off on the beach. They're not at their screens. So markets tend to be a little light, a little thin this time of year anyway. But the nice thing about this program is that we're not glued to one product. We can kind of jump around a little bit and go where the action is. And so let's kick things off, Nick. A product we haven't let off with in probably a few weeks or a month or so now. This is indeed the beans, the magical fruit of the beans. And what a kind of an interesting time it is to look at beans compared to some other products out there. It has been, like I said, like an interesting month. Beans have a little bit of a different flow to them, unlike, shall we say, some of the products that usually gold and others that are usually heavy in the front month rotation. The beans have their own cycle to them. November seems to be where the action is, and that was, again, the case this week with the NOVE contract leading the charge with about almost 60% of net volume. Net volume this week about 243,000 contracts, about 127,000 of that going up in November. And, of course, the strike du jour, the strike that led the action, was the NOVE 1100 calls. So some upside interest out there with about nearly 19,000 of those bad boys going up. Of course, not entirely surprising, Nick, that calls would lead the charge when it was the futures were up net the front month about 30 handles and farther out about 20 handles. So the futures were up pretty strongly again this week. And of course, all that upside vol coming off a little bit out here in beans land with vol kind of across the board off about. It's like about 2 points or close to it, depending on how far out you go. And that kind of is indicative, Nick, of a little bit of a change, because you remember we were talking about beans a few months ago and how rich the calls were. So typically that's what, remember we were talking about how things were very favorable in setups for risk reversals in terms of buying cheap puts and selling risk calls. You can do it for even, you maybe do it for a credit because the calls were so juicy. So you think in that environment, a rally would lead to higher vol, not lower. But it sounds like and looks like what I'm looking at here, maybe you concur with this as well. It seems like perhaps we're not in that, no longer that in the environment anymore where it's all collar time all the time out there in soybeans. Do you concur, sir?
Yeah, I think we answered that question last week, too. Somebody said, is it still out there as an opportunity to put on some skew plays in the beans? And last week, even, the levels were much higher, meaning that the calls were still a little bit juicy in comparison to the puts. Well, that's no longer the case this week, and if you go out there and take a look on the report, you're going to see that everything's sort of pushing its way back down to even levels. Still a little bit priced to the upside, but from where we were or where we have been over the last few months, absolutely not the case. And you can equate that to a couple things. The futures are generally at levels they were a month ago. So even though we're up this week, we're kind of going back into old territory. So you're going to see that upside not be so popular as it was before. Initially when we started talking about it, when there was the big drenching in Brazil or South America, wherever it was, that was pushing the prices a little bit higher, and that was sort of an event in and of itself. And then there were some other things that took place, and USDA reports, that type of thing, in terms of the yields available for the different crops. But we're definitely seeing skew come off here. Vol was down generally in the contracts that trade. And Mark, you mentioned the November contract. As a reminder to everybody, the months trading in front of November, September, and October, those are old crop options. That's basically the harvest from last year still. And then the November contract starts the new crop option. So you're going to start seeing, and part of the thing I noticed this week is you're starting to see like the Jan and the Feb and the March, or the Jan and the March out in the beans of 2017 starting to trade, because that is that are the non-standard options on the new crop, which will then be the old crop yield. So skew down. So that plays generally probably not there waiting, not there like it was before. And if you guys get an opportunity and you go back and look at some of the old abstracts for the earlier shows, we put out some links to some trades that took advantage of the pricey skew, and two of them have rolled off because they were on some earlier contracts, but there's 2 November trades that are still out there. And keep in mind when you look at those are for 1 lots that we put on. So I think the last time I looked, they had some pretty good return. A 1 lot was a $660 winner per 1 lot, and then there was like a $900 winner per 1 lot. So again, not saying that we know anything or knew anything. It's just the whole point of some of the conversations we have around the skew is that the things tend to go back to normal. And if you can stand it and put something on and keep it on for a little while, that trade's been on, 12 weeks now, 10 weeks maybe. So that's a pretty good return for something like that. But take a look at them and see what you think. And then, as Mark talks about, those all came from looking at the quick skew and sort of seeing where it looked like some of that volatility level was going to go back in the juicy calls and the kind of the beaten down puts. So that's probably a reason for a lot of the downside on the vol. So I have a message on here: the vol got smoked pretty much this week, and that's kind of the case. Skew as well, and. There's some increased OI, not a great deal. And again, the thing we mentioned most of the time, just the overall volume is kind of flat, puts the calls. Put call ratio is almost around 1 across the board for the entire bean complex that we have out there. And the put call ratio didn't change much from an open interest standpoint. So it's still, the calls are a little bit more fancied than the puts themselves. But other than sort of a retracement in the underlying back to some old levels, and it was pretty steady pace up from the last time I looked, I think. So nothing really too exciting, no crazy strikes or anything like that, just sort of retrading heavily of the strikes, moving towards the upside calls like you mentioned in the 1100.
Nick, I was just looking at it. We put out before the show, as we like to do now. We like to have some fun with our listeners. We put out our TWIFO Pop Quiz for this week. Last week we talked about what contract does the most volume, whether it was the E-mini just regular weeklies or the monthlies or the end-of-month contracts, and it seemed like there was a lot of back and forth between the weeklies and the monthlies. I believe the monthlies ended up winning, even though we told them during the show that it was the weeklies. This week we had on Nick's behest, we added a new wrinkle to our quiz. We didn't just make a straight-up contract volume. We said which product had the second highest options volume for this week. The poll just went up, Nick, so the votes are still coming in. But so far in the early voting, I'll scroll down so you can't be tempted to cheat. In the early voting, what do you think is winning our quiz?
Well, I'm going to go, even though I think I know the answer because I got the numbers in front of me, but I for sure. And that's why we asked it, what was the second most, because I think everybody would have thought the WTI was going to be the most, so that's kind of the wrinkle that we had. I would have for sure guessed that gold had the second most, but I don't know if that's necessarily the case.
Yeah, even we don't know sometimes, listeners, when we tweet these out. It's a dead heat right now, Nick, between WTI and soybeans for the number 2, and also dead heat for Comex Gold and natural gas. Each have 8% and 42% for WTI and soybeans, the other two. So we'll see how that evolves over the course of the show here. But yeah, listeners can't decide themselves, Nick. They're kind of evenly split as to which one is going to be the old market leader. Since we talked WTI, let's get into it, because you can't do a week without talking crude these days, right, Nick? It's kind of just still a product that keeps on giving. And another interesting week it was for crude. Last week we saw the Saudis coming in and talking up some of the crude. So as a result, we saw WTI rebounding off those lows. It broke ever so briefly through the 40 handle, then rebounded into the low 40s, and this week back up into the high 40 range, actually hitting 50 in the Dees contract out there. The contract settling up for the week about 3.5 to 4 handles out there. The active contract, again, as kind of is par for the course for WTI, is the front month, this time the SEP, with about 2/3, a little more than 2/3 of the volume coming up there. A week total about 681,000 contracts, about 400,000 and some change going up in the SEP. So clearly SEP was where the action was this week. And in terms of what was lighting it up from an overall contract perspective, It seems like, Nick, that the WTI traders in particular, partly because there's a dearth of strikes. You don't have that many strikes to choose from. It's a low-price product to begin with, and partly maybe because they just gravitate towards them. They like those kind of even strikes. They like the 40 last week, and this week it's all about the 45 puts. That's kind of where all the action was this week, with about 50,000 of the contracts that went up this week in the 45 puts, excuse me. Nothing else even comes close. And when you're looking at it, it was, again, another case of pretty fairly even trading across the board. Like Monday through today, it was all, a couple spikes on Tuesday and Thursday, but overall, it wasn't like there was any quiet days at 200 contracts. It was, people were lighting up that 45 put strike pretty much all week long. The next closest, you got to go all the way down to the 50 calls. Seemingly optimistic a week ago. This week, fast forward a week, not so much. The 50 calls doing about 30,000 contracts. That one primarily loaded up on Thursday with about 11,000 of those coming up, so about a third going up on Thursday alone. The rest of the week kind of scattered. And those are kind of the two big market leaders. Then you got to kind of drop off a cliff to get to the next big contract, which is really the 40 puts, the aforementioned 40 puts in October. Excuse me, I think I said that before, October. And those are doing about 19,000 contracts out there this week. Again, fairly even across the board. So even strikes seem to be where it's at, Nick. And in terms of the vol, as you might expect, crude has had that shape for a while where the puts were jacked and the calls not so much. So any rally is going to usually lead to a sell-off in vol. That's kind of what we saw out here this week as well, with the at-the-money vol off about 2 to 3 handles across the board, depending on where you're looking. A little more out there in the OCC contract where it kind of got smoked a little bit. I'll let you dive into the quick skew in a little bit, Nick, because I know that's your baby out there. But still, an interesting week from crude. Doesn't seem like crude is done giving us the gift of some activity yet, Nick. Between the Saudis and macro events and kind of the push-pull there between the 40 and the 45 and now the 50 strike, it seems like there's interesting stuff to talk about. Interesting enough, I just came off our show earlier this morning over there at the SIBO. We did a live volatility view show, and we were talking USO down there. And you would think, the shape of USO, obviously USO not the same product as a WTI, but obviously similar overlap. OIV and OVX move in lockstep, so clearly there's a vol trade there between the two products, so they move a lot. And so you'd think it would have a relatively similar shape to what we're seeing in WTI, which is the puts elevated, but not, off the charts elevated, and the calls relatively weak. And what we saw in USO actually this morning was the puts were a bit out of control out in USO, far more aggressively than we're seeing in WTI, which is kind of interesting, particularly because USO, a much cheaper product too than what you're talking like 9 handle puts and things versus 40 and 45 handle puts in WTI. So the puts were just bid up across the board, and the calls were weak except for 1 month, which was January 2017, which was bid up aggressively. So it did seem like it was maybe setting up. If you were indeed bullish out there in a product like USO, it was setting up very favorably for bullish risk reversals. Sell those super juicy puts, buy very cheap calls, with exception of Jan. It seems like it's not as well set up for that in WTI, but perhaps better than nothing. What's your take out here, and what's been catching your eye out there in the quick skew for WTI this week as well?
Yeah, so I'll address a couple things first. Like you said, the vol is generally knocked down pretty good. If you look at the futures, there was a pretty much a steady climb throughout the week. So it's about $1 a day when it comes right down to it. We're not quite up $5, but if you looked at the progression of the futures, it was up, up a little bit every day. The vol has been on a downward cycle, and the vol continues to go lower here. So it'll be interesting to see what happens if we can get this creep a little bit higher in the futures price. So one thing that we did talk about last week that I'd like to mention again, we added to the open interest profile tool, we added those max OI strike markers. And when we talked a little bit about the 45 strike last week, how it was sort of in the middle of the 40 and the 50 strike, as you mentioned, where that's where most of the action was, and that's where a lot of the barrier of trade was. Well, now that we've made that rally in the front contract here, in the later contracts, at least in October, from what I've looked at here this afternoon, the 45 is now the downside support, right? So it looks like we, unless there's some news and unless there's some more people on board in terms of the price support. We might have narrowed our range a little bit here in the 40 to the 45, at least on the front contract standpoint. Let me take a look real quick at the November contract, and I can get this out here fairly quickly as I elongate my words to pull it out. So now, ironically, we don't. We have the 40 strike still being the lower bound out in November, and the 70 strike as the highest OI strike in the October. But again, that's close to the 50 strike in terms of open interest, and as well as the 52. So we move back into old territory, right? We get the vol taken out of it a little bit. We still got a bid to the puts, right? We have the 25 delta that we're looking at all the time. It's still negative, got a little negative, but generally flat. From a change standpoint. And, as far as interesting stuff, the open interest is up almost 8%, which is still good, right? That means there's more trade. You mentioned the 45 strike, so that means people are that was where we sort of started the week. So that's at the money. It's going to get some action. But then as we rallied up, it's still, there was, of that 50,000, 25% of that was an opening position. So you see that change in open interest. That's always going to say there's more players in the market, right? So that's always something to keep an eye on as well. And that's a big increase in that October, almost 135% increase in the open interest for that strike alone. So, narrowing of range maybe, depending on some news. Maybe we get close out the month. I don't think there's any more reports outside of just, news that's going to come out from OPEC or the Saudis and that kind of thing. So, of note, there was some high strikes that traded, generally opening positions, not tremendous amounts, but in the February contract. And this might play into a little bit what you talked about in the Jan and the USO. 72 strike traded in the February contract, and out in the June of 2017, we have the 80 strike traded fair amount, 2,800, and I think that was 60% of that was increase in open interest, and of that volume, 60% of that was an increase in open interest, and then you got the strikes in the 70s and the 60s and in the mid 50s. So near term, still sort of a rangy trade thing. Long term, you see some action in the higher strikes. So, it's again, I like seeing higher open interests. You like seeing sort of the high OI strikes change, so people are getting a different sentiment in terms of where the action's going to be or where the trade's going to be. So, it'd be fun to keep an eye on this if we. If we trade back down to the 45 or between the 45 and 50 this week, vol's going to get rocked pretty good, I think. So it'll be fun to watch, see what happens.
Will be fun. Speaking of fun, people are liking seeing the pictures we tweet out here of us doing the show here, Nick. So if you're not following us on Twitter at Options or Nick over there at QuickStrike1 with no C, then check it out, because you're missing all the fun of Nick and I posting silly pictures, people liking the space, wishing we had a little mini keg in here, but we have a mini fridge. That'll do for now. Looking on here to the other product that a lot of people are paying attention to. This is another one we did an interesting compare and contrast this morning, Nick, as well, on the other program. Let's turn our attention to gold. The shiny stuff, gold. We need a drop from Goldfinger here whenever we do gold on the show. Gold. I love gold. I can't do it justice. This product, again, another one, kind of interesting. Net on the week, the futures didn't have a huge move, nearly just a little bit south of two handles out there, so about 13, not even a percent really. It's pretty small, but still we saw some decent volume out there. Open interest up about 3%, and volume fairly strong as well, with about 124,000 contracts throughout the week. Again, cmegroup.com/TWIO, TWIO, if you want to follow along for yourself. A little bit south of half, about 42% of the gold action coming in that AUG, which is, SEP, which is effectively a weekly now. It goes off in about 6 days, a little less. So that's effectively a weekly contract. So you can't really talk vol and things on a contract that's going away in about 6 days, more of a gamma-based product. But that's where the action was this week. Again, about 46,000 contracts there. And what was lighting it up out there in in gold, the 1,300 puts. Again, if you look at the top action-packed strikes, Nick, is like 1,300 puts, 1,400 calls, and then 1,300 puts out there in SEP and October and December. People can't get away from these even strikes, Nick. I don't know what it is. They have fascinations with them, with about 4,400 of those SEP 1,300 puts leading the charge so far this week. And we were breaking down the skew this morning in GLD, and now looking here at the big Comex Gold options, kind of a little bit of a similar shape, but again, GLD shaping up to be far more aggressive of a bid. We're seeing, unlike the WTI, where we're seeing obviously a heavy bias to the downside still, this is still fairly symmetrical, indicating a slight bias to the calls, but nothing out of whack, which is kind of indicating just a pretty much a strong bit of unanimity in terms of indecision out there in gold right now, in terms of no one's really leaning heavily one way or the other. Gold's one of the products we've seen the most evolution in the skew week to week in. So remember post-Brexit when it was almost like a straight up vertical wall. Everyone had to have calls all the time. Then the puts started gaining some momentum the following week. It started getting balanced. Then the puts were leading. Then it kind of got back now to where it is now, where it's more kind of in an equilibrium state. People are always asking us, hey, what are the options saying? What are the options saying for this name? What is the bias? And right now it's showing there really isn't a heck of a lot of bias, except very much in those front month contracts, like I was saying, again, reflecting the heaviness of the activity in the 1,300 puts and the put wing strikes. It's a little bit biased towards the puts, but again, hard to talk vol skew when something that's like less than a week to go. So in the little more longer term, a little bit more level-headed type term structure, Nick, certainly it seems like there is a bit of unanimity, and this was, if anything, the GLD skew was even more aggressive out here today in terms of puts were more heavily bid, calls more heavily bid. It seemed to be interesting. So interesting to see how these products play off of each other. Obviously a lot of the audience likes GLD and USO. A lot of the audience likes WTI and big Comex Gold. So, but obviously there's a relationship between them, and kind of seeing how the skews shape up, I think, is sometimes interesting or informative. Speaking of skew, Nick, I see you diving into all things gold and the quick skew there. What is your quick skew telling you about the shiny stuff this week?
Well, yeah, we re-mentioned the fact that not much happened. It was steady to just around them. We'll call it a tick around, right? Generally, when it's around zero, there's not much happening in the skew this week. When I go back and look at the October history for the quick skew, it's pretty much like looks like a highway for the last month, where just the calls are bid or rich to the at the money, and the puts are generally flat to a little bit cheap to the at the money. So, and further back, like you mentioned, the calls were richer than they were, and the puts were cheaper. So, and to support that sort of a non-interest type of, we don't know what's going to happen right now, or we're very comfortable with what the vol curve looks like. If you take a look at the October open interest profile as well, and we mentioned this last week too, and it's kind of like one of those throwaway things. The range looks like it's 1,300 to 1,400, right, in terms of the prices for the underlying, and that's because that's where the high open interest strikes are. And I think one thing to make that's the range, and I think if you look across the board, even longer term, the high open interest strike is the 1,400 strike. So I don't think there's much sentiment of the market going that much higher. Again, not being a gold bug or trading it, but just looking at how the numbers have been, what the ranges have been, what the trade looks like. You mentioned there's not a strike outside of the 1,300s and 1,400s, really. So there's not much going on, or it doesn't look like there's much expectation. The calls are still, from a ratio standpoint, the calls are still in favor over the puts, but I'm still going to say that, it looks like a pretty tight range. And here's the interesting thing, and I want to make sure I didn't forget this. That's why I wrote a note about it. It doesn't look like gold did much this week, right? We always look at that end result for the week, $1.50. It looks like in the front month, or a little bit more, but it had a $20 to $25 range, throughout the week. So what that says, and if you go look at currently, we have a proxy on the pricing sheets. We call it the rent, and that's basically how much the underlying has to move to support that volatility, right? And the rent is around $12.50. So, based on the volatility and how much the market's moving in general, it's and that's why you don't see vol in so much. The movement and the underlying support of the volatility. So that's something we should probably look at going forward on a regular basis, just like the crude and the other stuff.
I like the concept of the rent. That's a good way to term it. I like it. There's different ways to break it down. But the notion of your rent, you're right, because when it comes to vol, at the end of the day, vol is just basic math, and if you're not moving enough to justify your vol, it's going to come in. And sometimes vol traders are good at basic math, sometimes not so much. We debate that a lot in our volatility shows, you might imagine. But in general, it is interesting to see. And maybe that's something we could work into the TWIFO, so we can talk about it on its future shows. Hey, what's the rent? I like that terminology. I think that's pretty cool. Speaking of terminology, as we come towards the tail end of the show here, let's do. What do you think here? We'll call it here, Nick. Even though the poll still goes another hour. What do you think? It's fluctuating yet again. What do you think is our people are choosing now for the second highest options volume? And then let's give them, I think we gave them before, let's make sure we give them the definitive answer right now. What is the second? So give us your vote for what you think is winning, and then tell us what the definitive answer is for the poll, the quiz.
Based on what you said, I'll go with that people voted for WTI being the second most.
You technically win. It's a tie between WTI and soybeans still, but much less votes have come in for Comex Gold now, which is at 21%. People must have been listening to the gold segment. They start voting for gold. And then only 7% for nat gas, which we didn't cover on the show this week, but maybe is one I think for future segments might be worth diving into a little bit here on the program. But yeah, so and the winner, Nick, the ultimate winner here of the pop quiz.
I'm tallying now. Let's see. I have almost all of them. And remember, this is for second place.
Yes.
This was not for first
not
place.
First place, second place. So
it's very
a little bit of
important.
extra mental arithmetic we have to do this week. While you're doing that, maybe I'll do a little light breakdown on nat gas. You want to do that, Nick?
Sure. No,
I'll give you a little extra time for Nick to do his own basic math, like the volatility traders over there, while I'll break down a little bit of nat gas. We haven't talked about nat gas a lot. If you guys follow along with it on the cmegroup.com/TWIO, make sure you click on a couple different options in there. There's American, there's European, others. Click on the European. That's where we're looking at right now. The product doing about 334,000 contracts over the past week. Open interest up pretty decently, up about almost 2.5%, about 67,000 contracts open interest increase over this past week, which is pretty sizable for this contract. And again, this is one that doesn't have the overwhelming selection of months and strikes you may have come to know in other products. You got SEP and you got OC right now. That's kind of about it lining up over here. And you see a total of pretty much a straight up breakdown, about close to half and half, slight bias into the SEP there in the nat gas. In terms of the contract that lights up, again, you're talking nat gas too. It's a cheap product. You're talking $2.5, $3 contract out there. The futures were kind of essentially unched net on the week, so we didn't see a big underlying move. Even so, vol creeping up a little bit out there in the front month, which is again a weekly. So take that term vol with a bit of a grain of salt, and a little bit, about 1.5 points out in the longer term contracts. And again, not too many strikes to choose from. So when you have that, you kind of have kind of an aggregation of liquidity around a handful of strikes. And in this case, it was the October $3 call even that was kind of the winner of the week, with about 35,000 contracts lit up pretty evenly, except for it was pretty heavily on Thursday and then Friday today, with about 11,000 and about 17,000. So 28,000 of that 35 coming in the latter 2 days here of the session, followed by the 3.25 calls as well, with about 27,000 out there as well. Those also primarily trading yesterday and today. And in the front month, we also saw the 2.5 puts, lest the puts be forgotten as well, with the 2.5 puts out there in September, doing about 31,000 contracts. That one a lot more even, 12,000 on Thursday, and the rest kind of evenly split throughout the week. And about 28,000 of the 275 calls, which are close to, they're still out of the money, but they're close to the money, a little closer than the 3 anyway, with about 28,000 contracts there. The lion's share of those going up on Tuesday, about a little over half, 15,000 of those contracts going up on Tuesday. I said net vol was off across the board, and we're seeing a little bit of fluctuation again in that front weekly contract. Not so in terms of skew, not so much in the October contract, which still is kind of similar, if not unched, to what it was last week. There you go, Nick. I filled for you for a while. Have you been able to complete your basic mathematics, or should I go on at length about another product for you?
I think we got it. So
what is our number 2 winner? More votes coming in with WTI taking the lead now in our poll with 40%.
Our number 2. I'm actually surprised, and I'm glad we said number 2 because it made it a little bit less easy, I think. But our surprise winner at number 2, in my opinion, the surprise winner is nat gas with roughly 287,000 contracts that traded in the options. Now this I'll put a caveat on this. In Quick Strike, we cover a generally big portion of that term structure, but since a lot of the stuff that's further out, we don't necessarily load, so we might be missing some of that volume. But even so, nat gas over double what gold was. Probably 25 or 20% higher than the beans, and half of what the crude oil was. So I think that's a pretty good indication that there's some activity there. I think probably next time maybe what we need to do is do a volume as a percent of open interest, because that might even be a little bit trickier to figure out. But then silver might win one day for all we know, because it might trade a lot and there's not a lot going on out there as it is. But that's nat gas. I don't think we have much out there from people on a vote for nat gas there, unless you're a nat gas guy.
Yeah, not a lot of votes streaming in for nat gas. Took people by surprise. Only 7% of the votes. I just tweeted the answer, so maybe I should have waited another hour for the poll to close, but I tweeted it out so people can get the actual answer. I bet you we'll still get some votes for WTI and gold and everything else coming in, over the course of the next hour or so, as even though we just put the answer out there. But that music, Nick, means we've come to the close of yet another fun live, at least in-person edition, and certainly live via Mixlr as well, edition of TWIFO. Also come to a close of this broadcast week here on the Options Insider Radio Network. I think I still have some voice left, which is amazing. After doing 2 live shows today, 1 in person, actually 2 in person, really, when you think about this one. So I'm glad to have a bit of a rest. But before we go, Mr. Nick, you guys are always working on cool stuff, cool widgets, adding the quick skew, adding this stuff, adding heat maps. What is cooking? What is coming down the pike in the land of all things Quick Strike?
Okay, well, am I on? All right, well, I can reiterate something from last week. The heat map is a week away from being live on the CME Group website. I think you guys are really going to like that. That's going to show you heat by column, so you could see max call and put in a particular expiration, or heat by the entire matrix by whatever expirations you choose to display on a per product basis. So you're really going to like it. So that's coming out in about a week. So that's the big one. Still working on a release date for Quick Skew or some version of it. I know I've been throwing that out there quite a while, but it's just one of those things we want to make sure it's exactly right and that everybody understands it when it goes out there. And what else? Same as always, go out there, take a look at Essentials. If I haven't said it before, I'll say it now. We did turn on ticking futures in Essentials, so you can go out there and the pricing sheets, they're not going to have any volatility changes or anything like that, but you're going to see price changes based on futures, so you can play with it and look at it and see how it's going a little bit more easily. So if you got any questions, shoot us a tweet or shoot us an email.
All right, if you're not following Nick and the Quick Strike team over there at Twitter, it's at Quick Strike, QUIKSTRIKE1 for following him there. And, of course, follow us while you're there at Options as well. We tweet all the links. If you're not following Nick, though, you're missing all the cool charts and graphs he tweets out throughout the week, as well as during the show, so you guys can get some insight into our polls and our quizzes and all the other fun stuff. And, of course, make sure you head on over cmegroup.com/TWIO this week at Options to check out for yourself. Don't take our word for it on the show. Go kick the tires yourselves and see all these tools we're using throughout the program, the quick skew, all the different changes in vol and delta and volume and everything else that we talk about here on a regular basis. And it's all there for free. You're silly if you're trading these products and you don't try it. And on behalf of Nick and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great questions. We'll probably get to more next week, as well as, of course, for streaming live. We love you guys, too. And we'll see you next week right here on This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.